what are you starting to see in the industrial market across the board as kind of some of your potential black swans?
Yeah, I think for industrial, the handful of big players, the Amazons of the world, really overinvested. And I remember talking with people that were in Amazon's real estate, and they were leasing like more space than they needed, putting up temporary walls that they were going to sort of grow into this space. And so I think one issue, and there's maybe some data on this as sparse, is that there's a lot more shadow supply of industrial out there than people believe there is. I do think that there's some green shoots in terms of kind of a renewed interest in industrial policy for kind of more flex industrial manufacturing, things like that. I think logistics is going to continue to be very volatile as we sort of work through a deglobalizing world, but that some of these other uses, kind of the flex manufacturing, industrial, things like that, could be big beneficiaries. And to the point about asset specificity, if you have a industrial property that was kind of tailor-made for logistics, it's very hard to transition that to something else. These are not just metal boxes. So I think kind of the risk is that even for something industrial, which again, I think people think of as a relatively quote unquote simple asset class, this asset specificity and the nuances between geography and product type are going to become more and more pronounced. And, I think that's something that happens or those things become more pronounced in a downturn or in a softening market. On the way up, when cap rates are diving below 5%, if you can call it industrial, it's great. No one cares. But then when cap rates start rising and interest rates are higher, people actually start sharpening their pencil about what is this? And back to my original point, what am I actually exposed to here? What economic forces, what factors am I actually investing in here?